it's time now, Katie, for the Wall Street Beat. Jefferies looking to show progress in its bid to gain market share in the investment banking world. The firm is set to report earnings after the bell today, and here to look at what's ahead is Bloomberg finance reporter Katherine Doherty. You know, we look at Jefferies because it's kind of a bellwether, right? It's kind of telling you the way trading is going to shape up. We already have hints from the likes of Goldman that things are going to be a little weaker than they were in a gangbusters year ago. What do we expect from Jefferies?
So the other element that we're going to be looking at here is within investment banking, advisory and debt and equity underwriting. So beyond trading, those are some of the key factors that are going to make a difference when looking ahead to the other big banks that are going to be reporting in October. Jefferies will break out these elements, and we'll start to get a flavor for what investment banking is going to look like across Wall Street in the U.S. Now, the interesting part about Jefferies, too, is that they really made a big bet on their people. They were hiring during some downturns, during a hiring freeze at other peers across Wall Street. So they've said that because of that hiring that they did, they're able to then look to see momentum and pick up market share because of the talent that they've invested in.
What does it tell us? I didn't know it was a bellwether.
So well, it always scares me because it's like, oh, earnings season is somehow here again.
Right, but so what can you take from Jefferies and use when you're looking at the rest of the street?
So they always come out a week or two before the other big U.S. banks, and it really is, it's core investment banking. So as Shonali said, trading will be the first kind of key sector that we'll be looking at, and then advisory. And that will give a sense of where are deals. Are they picking back up compared to not just a year ago, but the previous quarter? Summer is typically a slower period, but we didn't have a very slow summer. So it remains to be seen whether that will come through in revenue, and if advisory in particular is kind of the inflection point here.
You know, I was just taking a look at the shares, and I didn't realize this. Didn't know Jefferies was a bellwether necessarily. Didn't know that shares are up nearly 57% year to date. I mean, you compare that to JP Morgan, which we look at all the time, only up about 26% only. I mean, all in all, this has been a pretty good year for Jefferies in particular.
They've been showing significant growth, and they're not just attributing that to the overall market activity, but to market share gains, meaning that they're able to actually pick up and maintain the momentum that they've displayed. So we'll see if that comes through in the third quarter, whether their activity is it attributed to just more activity overall, in which case that could be at any bank. But what they're saying is, no, we're actually picking up market share as well.